trading webinar. So right off the bat, as always, get this out of the way, just a quick test of audio and visual. If you can hear my voice and see this opening slide, just go ahead and type a Y in the chat box for me real quick. All right, thank you, Raymond. Thank you, Tom, Sally, Robert, William. Awesome, got a solid crowd here today. And be sure to use that chat to ask any questions throughout the webinar, and we will get to those throughout and mainly after the presentation. Now, most of you should be familiar with my voice by now, but for any first-time viewers or Trade the Plan members, my name is Ty. I'm coming at you guys from Charlotte, North Carolina. I handle the business development here at Shark Indicators. I've been involved in the trading industry for several years now, and we as a company have been involved in the NinjaTrader ecosystem since 2011. Now, before I pass it off to the guys that Trade the Plan, let's take a quick look at the risk disclosure. Just take a minute and look this over. Futures, foreign currency, and options trading contains substantial risk and is not for every investor. As Daniel Rowe would say, don't trade with your lunch money, right? And just to answer the question that I know is coming, this webinar is being recorded. So just look for an email from Ty at Shark Indicators, and I will get it out to you guys by tomorrow morning at the latest. Now, most of you are familiar with Daniel Rowe and the team over at Trade the Plan. For those of you who are not, I'll have Daniel introduce himself here in a minute. So give your attention to these guys, and they're going to show you what you all came here to see. So at this point, Daniel, I'm going to promote you to presenter so you can introduce yourself to some of the Shark audience here, and then you can get right into it.
Beautiful, beautiful. Thanks, Ty. Appreciate it, man. Thanks, everybody at Shark Indicators. Jeremy, Zach, Keith, Ty. I've been working with these guys for a while now, and it's a pleasure. Let me figure out how to do this real quick. I've got so many monitors. Okay, you guys should be able to see everything. How's the audio? Is it broken up at all?
The audio is coming through loud and clear, Daniel.
It's good. All right, perfect. All right, great. Well, let me just kind of start off by saying this is not a formal webinar by any means. I'm not going to do a PowerPoint. I'm not going to try to market you with any gimmicks or anything like that. I just want to show you what we've been working on night and day for a while now, for months. I'm sure most of you guys know, I'll get into a little bit about me in a minute, but I'm sure most people understand that the markets are driven by volume, right? By the buying and selling of contracts. That's what creates price action. So it's volume that powers the movement of the markets. And price is really a derivative of that trading, of that volume, right? Most people would say that, you know, oscillators, moving averages, stuff like that, that those are second order indicators, but really they're third order. So the first order is actually the buying and selling of those contracts. That's what creates price, and price is a derivative. I wouldn't say it's a derivative, it's the culmination, it's what happens, it's the effect of that buying and selling, right? So you have a lot of people, and well, most of the guys that are coming into here are typically fairly well trained and knowledgeable about all this stuff. But just for those of you that aren't, you have a lot of people in this industry that teach, you know, my method is the correct method and everybody else is an idiot, kind of a thing. And you have a lot of people that are purists, as we say, that are, you know, purely focused on price action and only price action, as if indicators are completely useless and garbage and whatever. And of course, they'll base those decisions, they'll base their opinion on the fact that people have such a hard time creating automated systems from indicators. But there's kind of an inherent problem with building automated systems. Okay, I know that we're doing a webinar now with BloodHound, with Shark Indicators that make BloodHound and BlackBird. And I'm not saying that it's, you know, it's not possible to create fully automated systems that consistently make money. That's not what I'm saying at all. I'm saying that it's very difficult, and because of that, the difficult nature of creating this wonderful automated system that's just going to rake in money day after day, and you're going to quit your job and you're going to rake in, $5 grand a week for the rest of your life from this automated system that you create in 2 days. That sort of thing is just kind of unreasonable when I say it, right? But you do have to do this kind of work. You have to build these things out in a way that you can test. There's just a right way and a wrong way to do it. And it's a little more complicated than most people would want you to believe, I guess, if they're trying to, get you to buy their latest, greatest system for $1,000. It's going to make you $10,000 a month for the rest of your life. That sounds reasonable, right? So there are all these different competing views, all these different issues and caveats that most people don't really know about. But aside, forget all of that. What is the most important thing when it comes to trading, to price action? You're either going to be anticipatory or reactive, and that divides people into two camps right there. You've got some people that say, well, you don't want to be anticipatory because it's, quote unquote, a fool's errand to try to anticipate what the market is going to do. But what is it that you're doing when you're trading? If you're getting into a long trade, what are you doing? You're anticipating that it's going to move up, right? You wouldn't buy it if you didn't anticipate that, if you didn't have that expectation. So there are all these little nuances, and a lot of them are really contradictory. But at the end of the day, you do want to anticipate the movements of the markets, right? Because you want to have some idea as to how far the market is likely going to move in favor of your trade. If you get into a trade, you want to have some sort of probability worked out that you can trade with some degree of confidence. It doesn't have to be 80 to 20. It can just be 0.51, 0.52, and you can eke out money over time. An edge is not defined by, you have all these people that talk about this system's 80% accurate, 80% winners. Well, that's really irrelevant. That's only one side of the equation, right? What's the actual expectancy of the system? How much can you expect to make per trade, or per dollar risked, rather, right? Your R multiple. How much money can you actually expect to make over time versus how much money you're risking? So it's I hate to say it, but it's kind of a strange industry, right? The trading industry, the retail trading, because you have a lot of marketers that, man, they give a good spiel, and they sure sound like they know what they're talking about, and they're going to sell you this gold mine for $5 grand or $10 grand or whatever it is. But I don't know how many of you guys have gone through that, but I've gone through a number of those over the past, 12 years, 11 years. So over that time, I started off working for a fund in Ecuador. So I went to school in Paris, and my best friend and his wife were from Ecuador. Well, he was from Ecuador, and he offered me a job there working for his family's kind of private equity fund. So I took that job and worked there for a couple of years, and the guys that were working there that were actually doing, pretty well. They weren't, I don't know, a lot of people want to make 100, 200, 300,000% a year, and that's typically unreasonable with a sizable account. With a smaller account, it's not necessarily so unreasonable, but long story short, they were raking in between, I think, like 7 and 20% a year, pretty consistently. A couple of bad quarters here and there, but they were doing that with a couple of things, namely market geometry and volume analysis. Okay, volume analysis and market geometry. Market geometry is Trend channels, median lines. Let me just give you a quick little example of what I'm talking about here. Oh, let's see. Yeah, honestly, we've been working so hard on this, trying to get all this stuff done, that I didn't even bother to take the time to make a PowerPoint and all that stuff. I'm sure most of you guys have seen so many of those. It's probably just mind-numbing at this point. So I just want to get right into it. And what we're going to do, let me just say this. Let me start off by saying this and give you guys a link. I'm going to take this to a pretty extreme point on Saturday. I'm going to show you a lot of stuff in BloodHound and BlackBird that I haven't really shown before. And we're going to do that Saturday morning at 11 o'clock. Okay, so I'm gonna end this one probably within an hour. Just give you a kind of glossary overview, and then Saturday we're going to get deep into it, and I'm going to show you quite a bit using all this stuff inside of BloodHound and BlackBird. All right, so BloodHound and BlackBird allow us to do these type of condition building. So it's basically allows you to do anything that you can do in code, but using drag and drop. Right? Like you have all these different website builders now where typically you had to hire somebody to develop your website for you, but now you've got all these drag and drop builders, right? And anybody can build a website now. Okay, Jeremy and Zach did that same thing for coding for the trading industry. So now anybody can create their own automated system, and it's really pretty incredible stuff. So I'll get into that briefly today, but we're going to get into it pretty heavy on Saturday. So let me pass you this link in the chat. So that's to sign up for Saturday morning. Okay, at 11 a.m. Central. You guys see that? Okay, yeah. Okay, good. All right, well, so briefly, just about market geometry, right? We've had a major reversal in crude. It's pulled back a little bit, but I may be wrong about this, but I'm thinking that we're at some pretty major areas on the weekly chart. This is a continuous contract of crude oil. It's a weekly continuous contract. And you can see we're at the top of these upsloping channels, right? So this is the major high back in, was like the last, it's the middle to the last quarter of 2013 right here. All right, it did get as high as a little over 110, I think, here in 2011. Of course, the high was 148 something, and then right down to 32. What was it? I think that's off. That says 33.55. Okay, so then we went back up, right? We've got this massive uptrend into 148, and then right down to 33, and then you get this really perfect kind of ABC up into that high. Does this almost a triangle looking deal here, and then right back down to break that low, getting below 27. All right, so what's happened after that? We've had a really powerful 5-wave move down, and we have this really nice ABC back up, right? And we're right at the fib confluence. I know a lot of people don't put a lot of stock in fibs. I think it's because a lot of people don't put a lot of stock in anything in trading. And there's good reason for that. And then there's the reason that, okay, there's two reasons. Let's say there's two reasons. One is a pretty good reason because most stuff doesn't work, unfortunately. That's kind of technical analysis in a nutshell. Most of it doesn't work. And why is that? Well, most of it's based on arithmetic, mathematics, averages. You know, people try to apply physics to the market. People try to apply all kinds of crazy stuff to the market. So yeah, a lot of it doesn't work, but there are some other things that do work that people just immediately give up on when they lose money. So that's why you have, and I'm guilty of this. When I got started, my boss paid tens of thousands. It was close to 100 grand at least. It was over 100 grand on different courses and software, and they were making pretty good money, but he thought that I was going to be some sort of genius and come in and take it to the next level. Well, he was disappointed. How are you going to pay some kid fresh out of college, whatever, a salary, buy him a bunch of courses and say, learn how to trade, learn how to make me a bunch of automated systems that will start raking in 100% a year. Okay. So yeah, I tried nonetheless. But anyway, a lot of people get really, I hate to say disenfranchised. That's got such ridiculous connotation these days, but they get a little disenchanted with whatever system they've just bought because they start trading it and they lose a ton of money real fast. And most of the time, what are they doing? Are they even following the rules? If most people are losing a lot of money very quickly, what are they doing? They're typically shooting from the hip, they're jumping into trades, they're holding on to losers, and they're adding to losing positions. And then they get that deer in the headlights, just total shock and amazement that they're losing so much money so quickly. And then all of a sudden they've blown an account. So inevitably, if you're trading whatever system or whatnot, and you have this negative association or you have this negative experience, you're going to have a negative association with that system, whatever you were using, quote unquote, using to lose all that money. So anyway, it took me 5 minutes to say that fibs do have some merit, not necessarily in the exact way that they're taught per se. What it does is it gives you a kind of a relationship between waves, because waves do have relationships, waves of similar degrees, similar size, and on the same time frame. They tend to be related, right? You're not going to, well, long story short, here we're up exactly, well, right over 100% the length of this wave up, just above that. We've broken through the top of this upper median line here. We're well above this, not well above, but we're pretty close, overthrowing the top of this upsloping channel, and we've just turned down. So I've been talking about this for a while, talking about getting up to this major area and then turning back down and starting to go into a downward spiral back to 60 at least. So what we have in our trading room, we're doing this all day. Well, not all day. We're doing this 3 hours a morning, but I'm continuing to export all of this stuff. What we have now is the ability to use this toolbar that we have, and we're currently converting this to Ninja 8 right now. It's actually just started to work a couple of days ago. So we're able to draw, whatever analysis that we have on our charts and then export it to a server, and then anybody with the toolbar can automatically import those objects to their charts. All right, so these are exports that I've been doing for, I don't know, a couple of weeks now. And every time I do an export, it will take a screenshot of that chart and upload it to our Slack channel here. Slack is like a kind of well, it's a forum basically. It's more of like instant messaging for business, but we built this little program that allows us to automatically export screenshots and upload them to Slack. So this was what, May 18th? I'm talking about making it up to up in here, and this being an ending diagonal for this last little wave here up. All right, so big fourth wave layout. A lot of people don't like Elliott wave either. and I think it's because a lot of people kind of misuse it. It's more of like a roadmap. You don't necessarily base all of your decisions, all of your trades on it. It's more of, a roadmap. So this is what we do. We're using market geometry to define the areas that we trade, and then we confirm those areas with the volume. All right. So I'll get into some of this in about 2 or 3 weeks when we release this this service here, where we actually export all of our analysis directly to your charts, whoever has the tool. So what I want to go over now, and like I said, we'll get into this a bit more deeply, quite a bit more deeply on Saturday, but what I want to go over today is what we've been working on with this volume analysis tool, okay? And I'll get through this definitely within the next half hour. Let me just pop this chat out and make sure that I'm not missing any questions real fast. I'll just take questions this once right now, and then I'll take questions again right at the end, okay? So give me a second to read these. Let's see. Michael is asking, are there any good books on market geometry? Well, not really. There's a little bit in Edwards and McGee's book, Technical Analysis of Stock Trends. And that's like the first book that I had to read when I got down there to Ecuador. And basically all he's talking about is trend channels, right? Just normal trend channels. And then you have to find stuff from Alan. Most of the stuff is free online from Alan Andrews. You don't have to pay money for it. There's a couple of guys out there selling like rewritten info from Alan Andrews for $10,000. And it's like, a couple hundred pages for 10 grand. So yeah, that's kind of this industry in a nutshell, I think. Or not this industry in a nutshell. That's kind of a good description of about 20% of the vendors in this industry, let's say that. I don't want to lump everybody into one group. That would be ridiculous. But here on the site, if you enter your details here, which I mean, you guys, most of you probably already have. We don't exactly send very many emails, but if you enter your details here, you'll get a good glossary overview of market geometry. And, I haven't finished it because we have quite a bit of stuff that we're adding now that will get added into that document. So once we've just finished, well, we didn't just finish it, but we just launched this new site. So this is a brand new site as of today. And we've been working on this. We've been working on a new members area where all of the training and all of the downloads and license keys and everything will be on this new site. So we're just now coming together with kind of redoing everything. And this will be the next thing that we do is rewrite this to go along with this new market geometry analysis service that we're going to be launching next month, okay? All right, so back to volume. Now, the main problem with volume is the fact that, well, let's talk about intraday volume, all right? The guys that I worked with in Ecuador, they were looking at mostly 3 charts, and that's pretty much it. I wasn't really, when I was kind of working hand in hand with them, I wasn't allowed to look at fast intraday charts. But then I went off on my own because my boss was paying for it. So, but at any rate, they were looking at a weekly, daily, and 240-minute chart. All right, let's look at a 240-minute chart for a second. That says 60, but it's a 240. This is what volume looks like on a 240-minute chart right here in the sub panel, okay? You see the problem with that? So what is the issue there? This is what's called an ETH session, electronically traded session, or extended trading hours, including the overnight. So everybody knows that volume is important, right? It's what creates price. So it must be very important information, right? There's a lot of information out there on volume and about how trading syndicates and there's laws against this kind of thing, but that doesn't really stop criminals, does it? About how trading syndicates will try to mask their volume, and a lot of major reversals get put in the overnight. Okay, you ever woken up and seen this big sell-off and then a major low in the middle of the night, and then by the time it opens up, it's way up. So a lot of major turning points will occur in the overnight, and you're typically not going to see that if you don't know how to look at it on these intraday charts, because especially on the ES, that overnight session is so low, it's such typically low volume that it almost, you can barely even see it. So the problem with that is, number one, the variance between the sessions, right? It's very low volume in the overnight, very high volume in the day session. But then you go down a little bit further, or a little bit faster, let's say, and you're looking at now a 15-minute chart. And let me just turn these conditions off here. And you'll see that not only do you have the variance between the sessions that's pretty wild, but you actually have a third session in there. You have the European session. So you have very low volume in the overnight, but then it starts to pick up about 2 in the morning, Central Time anyway, right? And some of those European opens are much larger than others. Here you've got a very low one. Here you've got an incredibly high one. Well, excuse me, incredibly high compared to the previous, right? And then this one is maybe in between the two. So that's the Euro Open, European Open, and this is a US market. This is the US S&P 500 equities index. And then what do you have? You have the massive open at 8:30, and it's just ginormous volume. It's huge. And then what happens? You get the kind of lunchtime lull. And if you did this over 100 sessions, it would look like a normal, very high at the open, very low during lunch, very high at the close. And typically the open is higher than the close, not always, but if you, like I said, if you took, something statistically significant over 100 sample size, over 100 sessions, it would look like that. It would be higher at the open, low for lunch, and then high at the close, but a little bit, not quite as high as the open. So that's the distribution of volume. You have a problem with the variance between the sessions, and then you have the seasonality of the day session. Seasonality meaning high volume to open, low for lunch, high for close. So you got 3 kind of mini sessions in that day session. So long story short, how are you going to take that volume data on an intraday basis and make use of it? What are you going to do? How are you going to do that? I've seen people create software, like there's so many, well, it's not so many, but there's a handful of guys that try to apply Wyckoff's methods to intraday charts. Well, I'm sorry, Wyckoff's methods were for daily and weekly charts. How does that apply to intraday charts? Well, it doesn't. Well, why not? Because of the variance between the sessions and the seasonality of the day session. Well, there's even seasonality in this Euro session here. So tell me how you're going to apply Wyckoff's methods on intraday charts. You could probably show me some examples that are remarkable. Well, that's great. I can show you some examples of moving average crossovers that are pretty killer, but then you test them and you realize very quickly that, you know, it's a little disheartening, but most of what you'll test is not going to produce what you hope it will. I mean, we all hope that we're going to find the next greatest, best system, right? It's going to make us all kinds of money. But once you start really getting into this and start to understand statistics a little more than you did in college, it's pretty complex stuff. And it's a difficult thing to get something with a defined edge, with an edge that you can actually know for sure that if I do this over time, I have probability in my favor and I'll actually start to make money, even if I do have a streak of 10 losers or, heaven forbid, 20 losers in a row. But even if I do have a streak of 10 or 12 losers and a drawdown of 15 or 20%, I know that if I keep going trading what I'm trading, I'll continue to make money over time. Very few people actually spend the time and the resources necessary to do that, to prove that out, because it's just very difficult. And most people want to do what? What do they want to do? Screen time, right? Screen time and practice. Well, screen time is not practice, for one thing. Watching the markets, like I've heard people tell me stories. Well, I've just been watching the markets, 3-4 hours a day, just watching for the past 2 years, trying to get my screen time in practice. Well, watching them, what are you talking about? That's not serving you well at all. You're not doing anything, just watching the markets. Even if you don't know anything at all about trading and you just get into sim trading, if you're just watching live charts and taking trades, you're not doing anything productive at all. What do you have to do to be productive? If you don't have an edge, what do you have to do? Well, you have to prove one, right? Well, how do you do that? It's not easy. It's quite difficult, actually. There's a lot to it. There's a lot of things that you could do that are wrong. That'll be a total waste of time. And I did that for about 5 years, 6 years. So there's a lot to know in this, and there's a lot of ways that you could completely just waste 5, 10, 15 years. I know a lot of people that have done it. Studying the wrong things, studying things that don't work, studying things that people tell you work, that you pay a lot of money for, and then you have all this negative baggage attached to giving it up. You won't give it up because why? Because it's valuable to you. Why is it valuable to you? Because you spent a lot of money for it. But what ends up happening? You end up losing the rest of your money. Well, that's not good. So I hate to be so negative, but somebody's got to give people a kind of a wake-up call, because this is, most of the presentations that I've seen are all sunshine and rainbows, and buy this and make a bunch of money in 2 or 3 months, and well, it's a little bit more difficult than that. So what do you need to begin to actually get to the point to where you can make money? What do you need? Number one, you need a clearly defined edge. But before that, you need to learn how to get a clearly defined edge and not just rely on somebody that's selling you something, right? So those are the tools that Shark Indicators provide. They provide the tools to actually test out what you've been taught, right? But it takes some effort. You have to actually learn how to do it. Even these drag and drop website builders, you don't have to learn how to program PHP and CSS and whatever, HTML, but you still have to learn how to use the drag and drop stuff, right? So it's going to take some effort on your part. And I know most of you guys out there are probably not doing very well. I didn't do very well for 7 years. And it gets old, man. It's, you know, it's hard to do that day after day after day and still do the work necessary. Still, you know, mark up your trades, write out what you did wrong. Who wants to sit there for an hour and a half at the end of a trading session where you took 7 losers in a row or 10 losers in a row or whatever, you know? Who wants to write up how you felt about that and log all those trades? It's not very fun. Back to this, you need something that works, right? So the main thing that I did, I was working with shark indicators, helping them do some presentations and whatnot, because I was looking for a tool that could actually help me create the rule sets that I could back test, because I had paid all this money for all these different systems and I had all of this accrued, you know, knowledge and tools, but no way to verify that what I was being told was accurate. So I wanted to, number one, pay someone to program it, or number two, learn how to program myself. And I started to look into that, and I said, you know, I'm done with college. I'm not doing that. So what was my option? Pay someone or find a tool that could help me do that type of programming and testing without programming. And that's when I found Shark Indicators and BloodHound. And I hit the ground running with that. I mean, I was studying that thing every day for 12 hours a day. And within 6 months, I was teaching people how to use it and then building systems for other people that own BloodHound. All right, so I started helping these guys do some webinars and some training sessions and whatnot, and you know, quickly realized that, well, it's like any other tool. There's a learning curve, and a lot of people don't have 12 hours a day to devote to this. I wouldn't say that it requires that. An hour a day, really, with anything, you can learn it over time if you're consistent, right? It's all about being consistent. But anyway, I provided a service where I would help people. I would take their rule sets and build them out and show them how to backtest it. So I did that for a couple of years. And during that time, I was trying to piece together, well, you know, for one thing, I was trying to come to terms with what I had been told worked and what I've read about worked, and all these different systems that I've read about, and all these stocks and commodities magazines, and all these thousands of dollars worth of books that I'm looking at here that are worthless, most of them, and trying to piece together, well, have I been sold down the river, or you know, what's real and what's fake? And honestly, I think some of it's actually put together as disinformation so that the public will continue to lose money, uh, you know, to grow the purse of the bankers and the big traders, right? Somebody's got to be on the other side of those trades. So I was working hard to figure out what did work and what didn't. And the only thing that I could actually prove was valuable was market geometry, to define the areas of most likely reversals, and then volume analysis. Okay, and I've just shown you the difficulties with volume analysis, right, on an intraday basis. So comparing the open volume with the volume preceding the open, well, that's a total waste of time. And if you're running a moving average and you're looking at standard deviations and you know whatever, like Wyckoff on an intraday chart, well, forget about it, because you're going to have all these massive signals right at the open, and then you're going to have all those low volume, you know, no demand, no supply, whatever, just after the open and into lunch. And if you trade those over time, I can show you the back tests and the live tests. You're not going to make money. You're just not. You might make money for 3 or 4 days in a row, and then all of a sudden you think you've got a winner, and then you keep trading it. And you know, that's another problem. Just 10 seconds. A lot of people will start to trade something and never really get to the point to where they know it works or not. Because why? Because they don't follow the rules. And why don't they do that? Because it's very, very difficult, isn't it? Very, very difficult to stick to your own rules. Now, it's not for Josh. It's not for a certain type of person that knows exactly what they want to do. But if you succumb to emotional, I almost said trigger, but that's a ridiculous word nowadays too. If you succumb to these emotional responses and start to shoot from the hip and pull that trigger, well, you're never going to know whether what you're actually trading is useful, whether it actually has an edge or not. So it's a heck of a thing. I mean, this is probably the most, it's like it will tell you who you are faster than almost any other thing on this planet. You learn so much about yourself so quickly that it's actually quite scary. Well, it was for me anyway. So trading is a very difficult, well, it's a performance sport, right? It is. It's a performance sport. So how do we deal with this variance between the sessions, seasonality within the sessions? Well, we use what's called relative volume. Well, what is relative volume? Relative volume is looking at each individual time period, each bar's time period, and it's comparing the average volume for that time period to that current bar's actual volume. All right, so we're not comparing the volume within this bar to the volume within the previous bar. Why? Because that would be ridiculous on an intraday chart. You wouldn't want to do that. You could do that on a very fast chart if you're after the open, before lunch, after lunch, and before the close. You can do that. You can use a 2-minute chart or a 1-minute chart or whatever with raw volume and get quite a lot of good detail out of it, right? But on larger charts, especially 5-minute and larger, you're not going to get good information out of normal volume. It's just not going to help you. But with relative volume, we're comparing the amount of volume that typically trades. So this is a bar that closed at 5 a.m., 4:45, closed at 4:45 a.m. You see it? That bar right there. So we're comparing the volume that typically trades at 4:45 a.m., opens at 4:30 a.m., and we're looking at an average of that volume over the past, whatever, 10 days, 20 days, 5 days, depending upon the size of the chart. Okay, and how responsive we want it to be. Sometimes with larger charts, we want it to be a little bit more averaged, and we'll use a longer look back. With shorter time periods, we'll use a shorter look back, right? There's a lot of nuance to this that you won't learn until you actually become a member. But with this bar right here, so we're coming down hard, right? This big sell-off here. And I sold this high. I'll show you that in a minute. And I should have closed it here, but I was enthralled in testing this and working with the BloodHound templates that I'm making for this, that I said, nah, it's probably going to break that low and it'll keep on going down. So I didn't close it, but it was so obvious. And I'm still short. Long story short, I was up, I don't know, like $2,000, and now I'm back to plus 200 or something. But I'll show you that in a minute. But here at this low, so we put in this major high, and I'm not going to waste your time trying to show you how we figure that out right now. We'll go over that on Saturday. But here at this low, we're coming down hard, and it picks up pretty fast momentum right in here, right around the Euro open, right? And you see that uptick in volume, and it is pretty high for the European session. but you're not necessarily going to pick that up visually unless you're very astute, you've been studying volume, and you know what you're looking at. If you haven't had somebody teach you this, then it's not something you're typically going to see. All right, so that typically will go unnoticed by most traders. And this is kind of the time period, well, a lot of times, that larger traders kind of join up and work to put in a major high or low. And that's illegal, but you know, whatever. Does that stop people? I don't think so. I mean, there's something called a telephone, and traders can call each other. So yeah, it's colluding, but it happens every day. So at this low, we have what? We have this yellow bar right here, and you see this green line right here? This is not the best example of what I'm going to tell you about here in a moment, volume divergence, but it still is volume divergence. So we have this big, very high volume climactic action here as the range increases, as it turns down, breaks these lows. The range increases, as does raw volume, although not by very much visually, but standard deviation would show that's well above the third, even on the raw volume. But here, the relative volume, that's actually comparing each individual bar's volume with the same volume that trades for that time period, is very high. It's over 3.8 times higher. Okay, and then you do see it start to lose momentum right in here, right? We don't necessarily need a momentum indicator to tell us that. You can see it visually because it's moving down faster here and then not moving down nearly as fast. And then what starts happening? Let's say we just look at that very bottom of it. And this is the kind of stuff we're going to get into very deeply on Saturday. What's happening there? What do you see? Every time it hits a certain level, what does it start doing? Pushing back up very quickly, right? The wicks just kind of make that. That's really the only reason I use candlestick charts. Candlestick patterns are demonstrably, it depends on how you trade it at the end of the day, but if you're just trading based on the, you know, what's written in the textbook, it's demonstrably inaccurate. Candlestick patterns. I don't want to, you know, burst anybody's bubble. Well, yeah, I do. It's exactly what I want to do. I want to burst your bubble if what you're thinking is false, right? Wouldn't you want somebody to burst that bubble? If what you think is false, wouldn't you want somebody to share the truth with you? So, unfortunately, that's kind of the way it is with a lot of what's being taught. Yeah, I sound so negative, but somebody's got to be realistic, I guess. This last bar that actually breaks those prior two lows closes up off of the low right there, you see. And it does so on increased volume, increased raw volume, but also increased relative volume. All right. Now that increased volume, relative volume, when you compare that to the range of the bar is the high minus the low, right? You've got a very wide ranging bar here, and this is a very narrow ranging bar, right? When you compare that, the fact that this is a narrower range than the average, and yet increased volume, that's a very high volume per range signal, okay? So that's what we're calling churn. Was that Barry Taylor kind of coined that term, and that's a good term for it because that's, you know, when you think of churn, you're churning butter, you're swirling it back and forth, right? I don't know if anybody, and if you guys have churned butter, but that's what you're doing. You're swirling around back and forth, back and forth. Well, that's kind of what's happening inside of this bar, right? If you were able to look at the range, sorry, not the range, but the actual individual price movements up and down within that bar, you would see that it's much higher than the previous bar. Now this bar probably has the kind of the same thing going on, chopping back and forth, back and forth. And sometimes you can tell, I mean, you would have to look at the bid-ask data to really be able to see that, to verify that. But the fact that it's closing off of its low and it's got this big wick above and below it is sort of indicative that that's what's going on. It's bouncing around back and forth. So it's putting in a low here, right? That churn at a low is a very good sign of demand coming in at a low. And churn at a high is a very good sign of supply coming in at a high. Okay, so now what next? Well, a lot of us like to use non-time-based charts, right? In market geometry, you always want to use both time-based charts and a tick chart. And you'll see, I can't show you right now. We don't really have time, and I don't want to get into it because I'll get sidetracked. Well, especially on intraday charts, you have some channels that trace out perfectly. The market traces out in geometric patterns. Believe that or not, by the end of Saturday morning, you will know it for a fact because I'll prove it to you. The market traces out geometric patterns. And there's a lot of theory behind that, and I'm not going to get into it, but that's what, everything in nature does that. It moves in geometric fashion and growth ratios, right? So not arithmetic type, but geometric. And I think that's what messes a lot of people up that want to use averages because they look like they work visually, but statistically they don't really provide you much of anything. The typical, quote unquote support and resistance off an average is just a function of its look back. So there, I just try to burst another bubble that nobody will believe me about. But anyway, the market moves in channels, and sometimes you'll have perfect reversals from, this exquisite channel on a tick chart, where that same channel on a minute chart, the top or the bottom of the channel will be, at a completely different location. Location meaning time and price. So I'll show you a lot of examples of that exact thing on Saturday. So what am I saying? I'm saying that you need both time-based and non-time-based charts. Okay, what do you want to do? You want to make money trading. Okay, well, how are you going to do that? You're either going to be reactive, right? And you're going to wait for some sort of indicator to trigger you into the trade. And what does that mean? You're going to wait for it to move in favor of your trade, or you're going to wait for another indicator to cross that indicator and move in favor of your trade, and then you're going to enter it. And by the time you enter it, it's already moved out of the area that it's reversed from, so much so that you've now got quite a bit of extra risk on the trade, don't you? And in order to, not get ticked out just based on the random movement of the market, it's got to be a little bit larger, right? So wouldn't it be nice if you could try to figure out where that thing is going to reverse before it actually reverses, and maybe start to get in a little bit earlier, not necessarily have a much smaller stop, but have a smaller stop to where the relationship between what your expected income, your expected earnings relative to what you're risking is large enough that it actually makes sense, and that you're not going for targets that are smaller than your stops, right? If you have a target that's smaller than your stop, what does that mean? That means that you have to be correct much more often than wrong. You have to take many more winning trades than losing trades, right? Well, that's a problem because it's very difficult to do that. So what do you want to do? You always want to have your risk relative to how much you're going to make, right? Your R multiple. You want to try to make at least a bit more than what you're risking. Doesn't have to be 2-to-1 or 3-to-1 or 5-to-1. That's what I look for. I look for 5-to-1 or more. But by the time you average it all out, all of your trades, if you have an R multiple greater than 1, you're doing something right, you know. But you don't want to you don't want to expect less than what you're risking, because that's statistically impossible. If somebody tells you to trade with a stop that's larger than your target, they know nothing about statistics. I mean, it's a fact. Okay, so anyway, how do we get relative volume on a tick chart? That's kind of it's very difficult. It's very, very difficult. So if we're looking at a 5-minute chart, I've got a very clear open time and close time. What's going to be 15 minutes, right? Every bar is 15 minutes. So I just compare that volume to the previous day's 15-minute volume of the same exact time. Well, how are you going to do that on a tick-based chart? You know, a Renko, a tick, whatever. It's almost impossible. All right, we could not do it in Ninja 7 because the calculations involved would just crash. It wouldn't even, you couldn't do it. So Ninja 8 is so powerful now and so fast that doing these calculations is, you know, it's not instantaneous, but well, I'll reload this chart. This chart has, well, let me just count these bars just to give you an idea as to how many days worth of data we have here. So that's today's 24th. Yeah, so that's 3-4 days and 80 bars. So we have quite a few days here. And I'm looking at, for the relative volume calculation of this massive tick chart, I'm looking back 10 days. Okay, but what am I doing here? This is getting a little complicated, but this is how we're doing it. I'm not going to explain all the details to you because it would melt your brain. Almost melts mine, really. I'm taking a 2-minute chart and I'm basically taking the current bar's expected time as it's building and comparing however many 2-minute bars that makes up, and then a percentage of the previous and a percentage of the next in a very complex way that took weeks to put together and test, just to make this thing work with multiple time frames. The entire thing had to be rewritten. So what we have now is a shell that we can take anywhere we want. Next things I'm gonna be adding, just to interrupt myself here and move into a tangent as I typically do. We now have the shell to enable all of the order flow stuff that I want to do, not your typical order flow. A lot of that stuff is overkill and frankly a waste of time if you were looking for, you know, trades that last for more than 2 or 3 hours. It's great for scalping, but I don't know if you guys know, not very many people are actually successful at scalping. It's a very, very low percentage of people that get good at that. Order flow is great for that, yeah, but not going to help you on a 15-minute chart. So what I'm going to be doing with this is looking at bid and ask data, yes, but well, I'm not going to give it away. It's going to be like a relative calculation, but for bid and ask delta. So it's all set up to do all of that. There's a lot of stuff I have planned. It's probably going to take us another 3 months of development to get it to where I want it to be, because volume is the most complicated thing to work with, and it's so misunderstood. The few people that have actually provided software to do this sort of thing it is what it is. That's kind of the evolution of everything, right? That's the evolution of technology. So I learned all of that. I studied all of that because that's all there was to study, because I wanted to learn what makes the market move the way that it does. Of course, it's volume, but how, why, like, how does it actually work? And how does it work in relation to how far it moves? And what if you run into a brick wall of buyers, and then you have one time frame trading, you have other time frame traders that come in. Anybody can step in at a moment's notice and move it in the opposite direction. So you have 4 or 5 different reversal types that can occur with volume, right? Yeah, it is the fuel that powers the market, but not like a car is powered. There's a lot of nuances to it, and I think it's very misunderstood. I've studied all that there is out there, believe me. I have every single book on volume. I've got every single course that I could find in software. And this is the problem. Nobody was using relative volume, and nobody was doing it properly in relation to the differences between volume on a tick chart, volume on a minute chart. On a tick chart, you're looking at contracts per trade. So you're looking more at, are there more people with more money coming in, and they're able to take more contracts per trade? So maybe instead of 2.2 contracts per trade, you've got a spike in that tick volume, and it's 5 or 6 contracts per trade. Well, that's great. Does that mean that the market's going to reverse there? Well, no, because even big traders get it wrong. Typically, they get it wrong about 45% of the time, even more, right? If their R multiple is big, if it's really large, then they can be wrong 60, 70% of the time and still make money. So just because you have very high volume per tick doesn't necessarily mean that you're, at a good spot for a reversal, or you have a high likelihood of a reversal occurring there. So many nuances to this stuff. And what was missing was this: relative volume for non-time-based charts, okay? So in the top panel here, I have this new relative volume for tick charts, okay? And I'll show you dozens of examples. And BloodHound and Market Replay and BlackBird actually entering trades with this, but that'll be Saturday. But here, I'm looking at a 2-minute chart to build the relative calculation. Okay, it's a very complex algorithm. I'm not going to go into the details of it, but that's the relative volume output in the top panel. And this is the raw volume output. Okay, so what do you have? At the close of every single day, you've got this massive amount of volume. Well, yeah, I mean, that's the way it's going to be, right? So if you'll notice, there are even more differences that show up when you're looking at volume per tick. So we've already identified the variance between the sessions, major issue, yeah. Seasonality within the sessions, yeah, another major issue. But what do we have with the seasonality on the minute charts for the minute periods? You have a lot larger volume at the open than you have at the close, right? If you're talking about the open being the first 10 or 15 minutes compared to the last 10 or 15 minutes. Okay, but what do you have on the tick chart? At the close on the tick chart, you have monumentally way more volume per tick in that last 6-7 minutes than you can really even compare to the previous rest of the day. Actually, when you compare volume per tick, oftentimes right at the open, it's going to be the same as it is for the rest of the session. You don't have that really high density volume per tick, like really high consistently over time, statistically, until the close. This is the close. Huge, huge volume per tick. This is the close. Just happened to coincide with what? You see this one here? Huge, huge close, right? Very high volume per tick. But what is it in the relative volume? Well, it's nothing. So is it a significant close? Well, no, not really. Probably just going to keep on going up. Maybe it'll break this high and then put in a swing and turn back down, but it's not a very significant close. What about this one? Yesterday's close, where I sold, exactly where I sold, right at the close. Well, yeah, it's huge. It's a huge amount of relative volume. Look at the previous. The previous was 75%. And even a small difference in the relative volume from one bar to the next, in the raw volume, even a small difference is significant. But when you have these size differences, where you've got 242% on the closing bar, it's right around the close. I mean, that's kind of the close right in there. It's like the, you know, pretty much the close. The previous bar is 75%. So that's a dramatic increase in relative volume. So that is a very significant close. And what happens? Turns down immediately. And it goes back up and ticks out that high in the overnight. In the morning, actually. It took all night to get up to break that high. And then it goes straight down. And then you've got here at the low, what do you have? Well, it's not very significant volume per tick at 10 o'clock in the morning, closing at 10 o'clock. It's only a 10-minute bar. But the relative volume is very high. It's 232%. So if the range is narrowing and the relative volume is so high that when you divide it by the range of the bar, you've actually got, it's a little bit deeper than that, but so I don't confuse you. If it's very high relative volume per range and the range is narrower than the preceding bars, that's a very good sign of, at a high, supply coming in. At a low, demand coming in. All right, but you're not always going to get that decreased range into a high or into a low on the time frame that you're on. Everybody's always worried about, Daniel, you trade with so many charts, like how am I ever going to learn how to do that? I'm not trading all of these different charts. I'm trading the market. So this is the ES. I'm not trading with all of these charts, right? What am I doing with them? I'm getting a different view of the same market that I'm trading. Well, why am I doing that? Because that's the way you have to look at volume. All right, you can't look at volume on a single chart and think you understand it or know what's happening, what's going on. And why would that be? Because any bar's open and close is completely random. Yeah, it's based on a time period. Yeah, it's based on total number of contracts or total number of ticks or range or blah, 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 whatever. But the millisecond it opens and the millisecond it closes, it's irrelevant, right? What we're concerned with is the structure of the waves into the swing highs and lows. Like what size waves are we looking at here? If this is coming down into a major low at I saw this happen at the moment and did not close this trade here. Well, I didn't have time to deal with it, but just looking at this, let me show you this. So what do we have going on here? This is an hourly chart, right? What's been happening in the ES? Well, let's look at the 240 and actually get perspective. Interesting. So we've got volume divergence at this high. Let me explain volume divergence in about 30 seconds in a way that you can understand easily. So if we're moving up very quickly into a high, and at the end of that high, we have very high volume, and then we move down out of that high. So what I would call a sign of weakness, right? We're moving up into a high, and then all of a sudden we've got a little spike in volume. It's a nice churn bar, actually, in very narrow range. That's a very good sign of reaching supply. That's the whole purpose to this. Supply at a high, demand at a low, right? So if we're getting that fast move into the high, we get the sign of weakness, and then we go back up and test that high, but especially doing so on lower momentum. And by the time we break the high and have much lower volume at the end of that move as it's breaking the high than we had at the previous high. So I'm comparing these two highs together, right? Comparing that high and this high, and I'm comparing the volume, not the raw volume. That would be senseless on a 240-minute chart. It would be totally useless to use raw volume on a 240-minute chart, unless you're just trying to get like an eyeball view of it or whatever, just like a, you know, a quick, oh, we got higher volume here and lower volume here. So very high volume at the high, sign of weakness. Going back up on decreased momentum, break the high on lower volume, that's volume divergence. Okay, if we've hit a major area in the market geometry here, and we've turned down, and then we go back up, maybe break through it a little bit or hit the next one, and we have this volume divergence set up here, then I'm looking for a move down out of that high. Okay, and I typically want to break that preceding low there. Let me do this. So this is the toolbar that I was telling you guys about for Ninja 7. We're going to make it to where all those objects that we export in Ninja 7 will be able to import into Ninja 8. And this is the first little toolbar that I have here. I don't know if it's even going to work, but let's see if it does. This has been a very difficult thing to get working on Ninja 8. So yeah, it's going to work. Cool. So what happened here? I mean, it doesn't look as fancy as this, but it will very soon. Well, a couple months. Yeah, we'll release a beta version here in probably a month, not even. So I've connected from high to high. And what did we do? What did we hit? That's called a median line. When I told you the markets move in geometric patterns, I can show you, well, I mean, everybody in the trading room knows this is, you see this all day, every day, on every single chart, every single scale. What happened here? Straight down into what? The center median line on a huge amount of relative volume there, you see? Huge amount of relative volume. And what did it do? It stopped on a dime, and it did what? It moved from center median line to upper median line. You see? So that's what I sold, right? I actually sold it on the tick chart right here, but anyway. It came back and hit this one and then turned down all morning long. So I was expecting it to break, actually. I was expecting it to break this low, and then I would have exited. But it didn't do that. It came down into this previous very high relative volume, but very high relative volume when? 5 a.m., right? See, that bar goes unnoticed right there, doesn't it? If you're looking at this on an hourly chart or whatever, that bar basically goes unnoticed, right? It's lower than these massive bars, but these massive bars are massive. Why? because it's when all the banks are trading. It's when everybody's trading. It's during the business hours. So who's putting in these lows? I don't know. It's a good question. I'd like to know. So it came back into that low, stopped on a dime. How would I know that it was going to stop there? What would I be able to do? How could I determine that maybe it might do that? Well, I could use this new bar type that we have here and relative volume for non-time-based charts and have a pretty good idea what's going to happen. I don't even know if I want to sell this thing. I guess I have to. Now that I've shown you. Boy, that was a good marketing gimmick, wasn't it? So what do we have right here? Let me tell you what's going on this chart. On the top one, that's volume per second. Okay, that's just looking at how many contracts trade on average per second. Excuse me, I'm trying to get a drink of water. And I'm all out. So that's volume per second on the top. Okay, this one right here in the middle, that's relative volume. Let me, I'm trying to make this nice and neat for those of you that own it and everybody that's going to get it. But to put the label back on, I'm just going to put something very quick so you can see I think if I just have any text, it'll show the full name. No, it doesn't. Just bear with me for a second. So VPS will be volume per second. Volume per second, yeah, you can see it there, sorry. Right there. So volume per second, relative volume in the middle, which heretofore has been completely impossible because of the issues with non-time-based charts being non-time-based. Yeah. And then volume on the bottom. Okay. So even on a chart like this, which is non-time-based per se, you can still see the very high volume at the open and the very high volume at the close. Okay, but what I've done with this bar type, so the problem with, okay, you've got two different charts, right? You've got one that's built based on time, minute chart, second chart, whatever, 5-minute chart. And then you've got another one that's built on the total number of transactions traded. And then once that maximum number is hit, the next bar opens. So you've got time-based or tick-based or range-based, based on the distance between the high and the low. All right, so those are the three main bar types. Yeah, you've got Rinkos and point and figure and blah blah blah, but the major three, I would say point and figure is probably major one too. So 3 out of the major 4, minute, ticks, well, volume as well, and I'll have a version of this that you'll be able to switch out between volume and ticks, but I'm getting ahead of myself. Minute, ticks, and range. Okay, this bar type is merging the 3. So as I've been studying volume for so long, there are aspects of each chart that display volume in a way that I want to see in a positive manner. Okay, so the volume displayed during minute periods, during minute charts, will have a certain characteristic. You'll see the climactic action very, very noticeably. You'll have, when you have that very high volume that comes in out of nowhere, you'll see the range of that minute bar get very, very large, as does the total volume, right? So you see these climactic patterns very easily. You also see those degrees of lower volatility where it's maybe not moving so quickly, nor nearly as far, but volume is not necessarily waning as much as it would typically, which kind of gives you that rounded high or rounded low kind of a deal. So minute charts, time-based charts tend to display those sorts of things very, very well. Tick charts display, the total contracts per tick. It gives you, it's two totally different pieces of information. One is total contracts per time period. The other is total contracts per tick. So total contracts per tick is an added piece of information. You're getting to see, do we have mostly people that are trading one lots in there, or are they trading 2, 3, 10, 20 lots on average? But that can be very deceiving as well with all these iceberg orders and the way they what's the word I'm looking for? The way that they have to tell you, for lack of a better word, how those ticks are coming through, how those orders come through. They don't necessarily have to tell you that a certain number of contracts were all part of one trade. They'll treat individual chunks of that as individual trades, right? I think now they kind of reversed it and made it to where you could aggregate them, which would be to see, how many total contracts were in a specific trade, or keep the data unaggregated. I think they made that change in like 2008 or 9 or 7, something like that. It's basically right after I got started. They made that change in the way that they reported orders. And it was pretty obvious that it was for the benefit of a certain type of trader. And whose benefit do you think that might be? Somebody that trades big lots, right? Who else would want to hide their massive orders? Somebody saying it just got noisy again. Is my mic okay? Okay, good. So anyway, two different pieces of information. So what I wanted to do, because of the fact that the tick charts eliminate that overnight period very, very well, right? Especially on the ES, rather than seeing all those tiny little bars. So this is the overnight on a tick chart. Sorry, it's the ROE bars, not the tick chart. Let me show you the overnight on a tick chart. I'm sure most of you know. This is the overnight on a tick chart right here. This little section right here. And there's the open right there. So that's the overnight compared to the day session, which is about 4 times that. See? So the tick charts eliminate that overnight quite well, making the overnight bars relatively similar size to the day session bars. Okay? But obviously the volume per second is almost non-existent during the overnight. The volume per tick is almost non-existent. So wouldn't it be nice to have that relative volume for a tick chart? Well, yeah, obviously it would, because look at that low right there. So this is relative volume in the middle right here. And this is a tick chart. I'm going to show you the differences between the two, minute, tick, and these RTS here in a second. But that's the kind of signal we'll get. So what does that mean? 997%. Well, that's a nice pink and dandy little bar there. What does it actually mean? Well, look at how much it towers above these previous bars. That dark line that you see there, right? I'm gonna have to get some water in a second. My throat's about to close. That's the 100% line right there. Okay, that would be the average volume for each individual bar. Well, time period, but each bar has a different time period. So that would be the average for that bar's time period on a tick chart. Okay, so this is 10 times that average at 9:55. Well, what is 9:55? Well, it's meaningless. It's nothing. So what does this mean? That means that you have an enormous amount of demand coming in, 10 times normal at 9:55 and then 9:56. And then what was the low of the day? Well, that was one tick from the low of the day. You actually broke that right here. About 4 minutes later, you one ticked it. And then what happened? Well, it goes straight up from there. Wouldn't that be useful information if you were short from the open and you saw that? You didn't really see it on volume per tick, did you? It was a little bit higher than the average, but not very huge. But this is 10 times normal. That's that should definitely stand out. But this one, yeah, it's pretty high too, but what is it? It's a wider ranging bar than the preceding couple of bars. So it's actually breaking this low on increased range. Okay, these are some nuances that I'm not going to go into too much detail about today or right now, but this is kind of more in-depth stuff that we'll get into at a later date. But you have a wider range breaking the previous low. I don't know what's happening in the market geometry there, but I know that my area was right here at the low that I was looking at. It was that center median line. I was thinking it was going to, hopefully break that and get to the bottom of the channel, but that's the first big area that after seeing that bar, honestly, I should have exited, right? Did I delete it? What happened? Yeah, sorry. What am I talking about here? Talked myself into yeah, sorry, it was that trend line. Yeah, that's what it was. So sorry. So that's what we had come down and hit. Talking so fast, I'm confusing myself. You guys must be lost. So we came right down to that trend line and we get this huge amount of volume that comes in there. What does that mean? That's confirming that trend line, isn't it? Yes, it is. That's what it's doing. So this is the RTS, what used to be the RTS bars, the range tick in seconds chart. I've renamed it ROE Bars out of pride and arrogance. This is almost the high of the day right here. It's actually a very unique bar type, so I was talked into doing that. This is a very small chart though. This is combining on the ES 600 ticks. Sorry, I was about to say 500 ticks. So what this does, I've got way too much detail here, but let me just explain it to you. It's looking for a minimum range value, a minimum number of ticks, and a minimum number of seconds. Guys, I'm sorry. Can you just give me 30 seconds and let me get a drink of water? My throat is about to close up here. Just bear with me. If you need to get some water yourself, go ahead and take 30 seconds. I'll be right back. Okay, my apologies. I am back. I don't know if you are. Excuse me. So this is, I color this one blue or dark blue, whatever it is. Quite dark blue. Because this is the one, so I have two like this, right? I've got a 2-minute, which I deleted, didn't I? Yes, I did. Okay. Well, let me see if I can just build it real quick. So I have a very fast row bar here, which is kind of merging 600 tick, and it's basically in between like a 30-second and a 2-minute chart, something like that. And then the smallest minute chart that I'll use, which I'll only use for confirming trades, is this 2-minute. So you don't have to have so many bars. It depends on how many days you want to look back for the relative calculation, but we don't need to go into a training session about it right now. So typically I'll have BloodHound and BlackBird on the smaller charts, because what we want to do, and I'll start to get into BloodHound now, is we want to combine these different time frames for a very particular purpose, and that purpose is because of the random nature of when they open and close. You don't get a full picture of what's happening in the volume and the range, the volatility, right? How big the bars are or how small they are relative to each other and to the average, unless you have these various time frames. So yeah, it looks like a lot of charts, but it's for a very particular purpose and reason. It's so that we get a better view of, well, not only the market geometry, but especially for the volume. Okay. So we want to see, depending upon the size of the trade that I may be entering. So for instance, well, let's take the trade that I am in right now, which I'm sure I'm going to get stopped out of and be bent out of shape about for a couple of seconds. Let me connect to the broker real quick so I can show you what happened. So let's say that I'm getting into that short that I took. This is actually the first trade that I've taken in Ninja 8. And the only reason I took it is because I saw it all happening as I was putting this stuff together. Let's say that I'm getting into this trade right here, short, and I'll go through this and how this reader system works, and then we'll call it a day. I think maybe another 10 minutes, and then we'll do the rest of this on Saturday. But let's say that I'm selling that high. I actually sold this high, didn't get out like I should have. Ended up selling one more here, and then got out of one of them. So I sold one here, not very much in relation to the size of the account, but I was just kind of messing around because I saw it instantly and I didn't have everything marked up like I normally do, and I didn't want to get stupid with the risk. But one here, so I'm short two. Went ahead and took one off when it came back up a little bit to eliminate the risk, and then put the stop up here at 35. I think it was 34.75. All right, so it's going down. Well, why did I do that? And how do I go about determining how I want to use all of these different charts to confirm the areas that I'm trading? Well, how do I do that? How do I determine how I'm going to use the volume? So signals from where? Signals from what? From what chart? Right? That's kind of the biggest question people have. How do you use all these different charts? All right, well, if I'm shorting this down sloping upper median line here, and then a different one here on a tick chart, I think. I don't want to waste the time to try to figure out what all was going on here, but at this lower high, so we reversed down from some pretty obvious resistance here, loss of momentum, nice kind of what I thought was probably like an ABC into another high, that this may be going into an expanded flat, big 5-wave move down to maybe a higher low, like down in here somewhere around 2640. So how do I determine how I'm going to confirm these areas if on a 240-minute chart, I've got 1, 2, 3, 4, 5, 6 bars into that lower high here? So how do I determine what chart I'm going to use to confirm these trades like this, right? On the 15-minute, I've probably got my setup, because on the hourly, it's 25 bars. So if I'm looking at a correction, A, B, C, as a lower high, so the last trending move, in my view, was down from here, and trend is a function of time frame. It's really subjective. It's probably the most subjective thing in trading, and people just go berserk about trend. Trend from what? What trend from where? Depends on the size of targets and the size of your risk and what time frames you're trading, right? So on the 15-minute, we've got 89 bars there. So I'm looking for between, yeah, it's a fudge factor. It kind of depends on the type of pattern it is, but typically between about 40 and 120 bars, right? So that's about 89 bars on the 15-minute. So that means that I need to confirm that trade off of that area using something smaller than the 15-minute. Typically, at least a third smaller, or let's say 3 times smaller. Okay, so that would mean a 5-minute chart or less. I need to confirm that swing high right there, but it's at 4 in the morning, right? So if I need something smaller than the 15-minute, well, I've got a couple of different charts here I could use. I've got this massive tick chart, which is useless to me because it's way smaller than, way less bars than the 15-minute. Excuse me. Oh, wow, I didn't even, goodness gracious, I didn't have Ninja 8. I just had to reinstall this, and I didn't have
order pending.
Didn't have my orders set to good till canceled. Whew. Well, good thing I'm doing this live. It's pretty likely going to break that high. Should have closed this a long time ago. I just didn't have any time. Obviously, I didn't have any time because I don't have very much prepared today, do I?
Filled.
So I'll just close it right there. But I got short from here and then from here. What was I doing up that late? Well, I was working, trying to get all this stuff ready for you guys and for myself, obviously. So to confirm this swing high, I've got a couple of choices: a 2-minute, a 5-minute, or one of these row bars, okay? Or the faster tick chart. So if it's 89 bars on the 15-minute, I prefer to have volume divergence on the 5-minute. Sorry, it's rarely going to be on the 5-minute. Occasionally it will be, but if it's between 35 and 110, 120 bars on the 15-minute, I may have it volume divergence on the 5-minute, but typically on the 2-minute or the RTS 2 or the row 2, because we're calling these row bars now. And they're about to have some major modifications and update. So that's the high right here that I'm talking about, right before 4 o'clock. So you've got a pretty nice volume divergence right there, actually. And it ends on an extreme churn bar. Actually, I didn't sell it there. I sold it right here. Yeah. So I didn't hit the volume divergence there on the 2-minute. I think I went to bed right about 3 o'clock. Yeah. Yeah, I actually sold it right there at the end of this buying climax. But what I want to do to confirm that 15-minute area, that area on the 15-minute chart, let's call this a 15-minute. Goodness gracious, I'm going blank here. What do I? Operative time frame. The operative time frame for the trade is the 15-minute chart. So I want to confirm it with something faster. I've got, I don't know, 20 hours of training that really elaborates on that and builds on it one step at a time, so that you can really understand what I'm talking about. I'm probably losing some of you now, but let's go to a faster chart than that. Okay, what is this? This is the intra, not intra, but inter session period. This is the overnight, right? You're just getting into the Euro session. So if I used a tick chart or one of these RTS bars, then I'll absolutely have volume divergence at that swing high as well, because there's a lot less bars in the overnight on a tick chart or one of these hybrids, which is combining tick and minute. Okay, so let me briefly tell you this for about 2 seconds, 2 minutes, and then we'll move on. This RTS hybrid chart, what we're calling the ROE bars now, is combining the tick charts and the minute charts in such a way that we get the best of both, right? We want to see, we like to use tick charts for the overnight so that we can actually get a better view into those chunks of time. I don't know how to say it properly, but the way volume is so thin, especially in the ES in the overnight, when a market is very, very thin, you don't want to use a faster time frame. Okay, even though the ES is, you know, very high volume, in the overnight, comparatively, it's not very high at all. And using the same period chart that you would use during the day is fruitless. It's not a good thing to do. So you want to condense that volume and use either a larger chart or a tick-based chart or a hybrid. And when you're using a hybrid of the two, so this is the faster one of the two, you'll notice in certain sections of the overnight, a lot of these bars, this is actually the relative volume on the top and the raw volume on the bottom. Okay, you'll see the raw volume. Let me get rid of that big one so it'll auto correct here. Certain sections of the raw volume will start to look like it does on a tick chart. And then when volatility increases and volume increases, you'll get some of these bars close a lot faster than a time period chart would, because the maximum, I'm sorry, I confused you there. It'll close a lot faster than a tick chart would. Okay, and I'm doing this a very particular way. I'm going to lose you right now, but I'm going to tell you anyway. I have a minimum and a maximum value for each. All right, if the maximum value for the time period, which is a multiple of the minimum, yep, now I'm really losing you. Minimum being 30 seconds, maximum being a multiple of 8 times 30 seconds, so 240 seconds. If that multiple, maximum multiple is reached, the bar will close, the next one will open automatically without fail. Okay. If 9 times 600 ticks passes, if that maximum multiple is reached, the bar will close automatically, next one opens. Okay. So that governs whether it's functioning more like a tick chart in lower volatility, or more like a time-based chart during higher volatility. And you can tweak these settings per each market, and I'll just show you very briefly how we do that. So this is something I'm gonna give to you guys that sign up between now and the end of the weekend. This is something we developed for setting these RTS chart, these ROE bars and our tick charts. Okay, it's called a little time frame calculator. I've changed the color of the skin here to a lighter one. We just need to make a couple of adjustments. It's not ready today, but you guys will have access to it probably Monday or Tuesday. So a couple of things we're going to add to it. We're going to make it work for volume as well, not just tick charts. But what you do essentially is you add in, and I'm missing something here. There, the inputs, yeah. You find the contract that you want. Let's say the ES. You set the trading hours, and I use the RTH session. So that would be CME US Index Futures RTH. And I want to compare it to 7, 8, maybe 10 sessions. So let's just say 7. And I want to find the total number of ticks that would trade for the average number of ticks that would trade during those 7 sessions, during that RTH session. And I want to match it up with a target minute period. And that target minute period for my fastest tick chart would be a 3-minute chart. Okay. And then I hit calculate. Am I connected to data? Yeah. And then it'll spit out what the best number for the tick chart is that I should use to match up with that 3-minute period. So right now it's actually 25.77. So before, when we were in that really high volatility move down, it was like 3,800. Not long ago, it was 3,000, somewhere right around there, which is why, no, I still have this one set to 3,600. So yeah, it was like 38, then 36, then about 31. So volatility's actually going down since we've started to move back up, which I think is pretty noticeable to most people, as we were going, straight down and chopping back. And you see it on the 240 minute. You see this? Obviously, volatility and volume picked up there. Yeah. And then, when it came back down, it picked up again, but now we're starting to move back up, and it's sort of fading, leveling off. Doesn't mean that we're not about to put in another swing high and head back down. I don't know. I'm kind of thinking this is the end of a triangle, and we're going to move up and out of that low, which is what I've been saying since that low was in. But there is the possibility that this is another swing high that we're coming up on this next high. So those are the two main possibilities. Either this is the end of a triangle and we go up to new highs from here, or this is a new downtrend, and the next leg down is coming up, looks like within maybe the next week and a half or so, if that's going to happen. I'm of the opinion that this is a major low and that we go to new highs, but I think I'm the minority on that with a lot of people, compared to a lot of people. So that's kind of the gist of the ROE bars and how we figure out what the settings should be relative to the market, and it's something that we're going to start updating once a week. Okay, that might be a little bit difficult for some people. We might do it like once every 2 weeks in the trading room. But anyhow, that's the ROE bars, and we use those specifically for the much better volume signals that we get out of these. Okay, because it allows it to look like a minute chart at certain periods and then more like a tick chart in other periods. And it does that exactly as I define it. So it's a very complicated bar type, and it was pretty difficult to figure out how I wanted to do it. But the development team that I have are not only incredibly gifted programmers, but also traders. So I design what I want, and I do this, giving you guys a presentation now and marketing this because it is expensive. I mean, I've got 4 full-time employees, and it's a lot of work that goes into this, but I'm dedicated to it because these are the tools that I want in my own trading. I know this is what is the most important. There's nothing more important than the areas defined for the major reversals, and then what causes those major reversals. What does? Well, it's volume or lack thereof. So those are the 2 most important things, market geometry and volume as it relates to price. And price is, it's a pretty big topic, but it's the size of the bars relative to the volume and relative to the preceding bars and relative to the average size for that time period. And then also in light of whether you're using minute periods or non-time-based, such as tick charts or what we have here now with these ROE bars. So there's a lot to it. There are a lot of variables, and I think most people just don't think of these things. Maybe they think it's not necessary, and then they blow their accounts, and maybe they consider maybe it is necessary, or maybe they just don't even think about it anymore because they've blown their account. So what is at this low right here? Pretty awesome volume divergence. Yeah, you have it in the raw volume as well. Relative volumes on the top, raw volume, which is total number of contracts traded per bar, on the bottom. So relative volume on top, raw volume on the bottom. But when you get into, this is not always going to be like this. A lot of times they will sort of line up on these ROE bars, because during the day session, the ROE bars tend to act more like time-based charts. It's in the overnight, especially in the pre-market, that they really, really differ. Let me just give you a couple of examples real quick here, and then we'll call it, actually, before we call it a day, let me show you one thing we can do now. And I'll do this the same time I'm giving you an example here. So this is BloodHound. This is what we're going to be using extensively on Saturday together with BlackBird. BloodHound allows us to build out conditions that we would use. So why do you want to get into a trade? Because X, Y, and Z happened at a very specific time, and maybe X, Y, and Z happened on one chart while A, B, and C happened on another, and you want to combine those conditions, right? Well, BloodHound allows you to do that. Excuse me. So BloodHound allows you to do that, to build out these conditions, and it's drag and drop. It may seem a little frightening to those of you that haven't seen this sort of thing before, but I assure you it's a lot less frightening and a heck of a lot easier to learn than is programming, a script language, a programmatic language. So what I have here is what we have in NinjaTrader 7, which is our reader system. Ty, I told you I'd go for an hour, and I think I'm almost at 2 hours now, but I'll be done here in, I think, 5 minutes.
No rush at all, man.
All right, cool, thanks. So I've got, let's just put it on the chart that it's on. So I have this reader system. Let's use the 2 minute. This is a 3600. I'll use the relative volume, which is on panel 3. Excuse me, guys, sorry. What I have here is a reader system, which enables us to use the signals from any other time frame, any other chart on any other workspace, and get those signals into BloodHound without actually without having to bring those higher time frames inside of BloodHound. I'm just trying to see that one, yeah. And we have multiple data series for the different signals. So whether they be churn bars, climax bars, those are in the same data series, but then we have volume divergence signals, right? So there's a couple of different choices in here. I don't want to confuse you, but so let me explain this a little bit. So in order to get higher time frame, NinjaTrader 8 is a little bit better. Well, it's a lot better than NinjaTrader 7 was as far as multiple time frame stuff. There's still some issues, but to get higher time frame signals inside of a single chart to run a strategy, you have to bring those charts into the chart, the existing chart. And when you do that, you have a problem with, what if it's time-based and the other is non-time based? One closes at one time, the other doesn't close until, whenever. There's a problem with equidistance between the two. They've corrected a lot of that, granted, with Ninja 8, but you still have a number of issues. You cannot load different number of days back. So each one has to have the same number of days back. And relative volume, we need different days back depending upon the size of the chart. So there's a lot of different issues with multiple time frame trading and strategy development and algorithmic trading, backtesting. I'm not going to get into all of it. Just know that it's a big issue and it's something I wanted to correct. It's something the trading industry, I think, desperately needed. I don't know if anybody knows that I've done this. Very many people know, but there had to be a solution for it to do what I wanted to do. So we made the solution for it, which is to read the signals from any other chart. All right. So, why be limited to only accessing the indicators on the chart that you have your strategy on? Why not be able to access the indicators and the signals and the charts that you have on the rest of your workspace? Why limit yourself? Why should there be any limit when we can program anything given enough time and resources and experience and execution? So it took a while, but like I said, we have some pretty exceptional programmers and development team, and they made it happen. And it was difficult getting all this stuff moved over to Ninja 8, but we've overcome a lot of hurdles recently, and it's starting to move forward much more rapidly now. And this is one example of that. So Jeremy and Zach and the team at Shark Indicators has BloodHound and BlackBird working quite well. I mean, I don't see any issues with it at all in this latest beta release. So it's functioning, just like it did in Ninja 7. I think except for a couple of minor things with like displaying the prices of orders and stuff in the axis over here. As far as functionality, it's just like we have in Ninja 7. So we can actually now, with our reader system, access those signals from another chart. Yeah, I wanted to show you another chart, not the same chart. What am I doing? Yeah, so I want to show you that volume divergence signal right there. Actually, let me do this. That's a 2-bar pattern right there. So this is a big selling climax, wide-ranging, high-volume bar. And then the next bar, it's lower volume, lower relative volume, but look how small that range is. So when you divide the volume by the range of the bar, it's actually very high and very much higher volume per range. And volume per range is one of the better ways to look at supply and demand. Order flow is, in my opinion, and I mean, I would say I have an educated opinion, is overly complex It's useful for very limited applications, but most people are not going to get to the point to where they can use it effectively. Maybe that's a mean statement to make, but it's very complex and it's a lot of numbers and it's mind-numbing and it's a distraction for me. So total volume per bar, and depending upon what's the size of the bar and the time period and all of that, is much more useful information when you're trying to figure out where the market's likely going to put in a low and a high and then move in the opposite direction, which is kind of what you want to do if you want to make money. This is where it's at. Maybe order flow is useful for momentum trading, but me, I've never had luck trading momentum. Every time I try to take a momentum trade is right when it reverses and goes back and stops me out. So this is where it's at for me. Identifying these major swing lows and highs throughout the day and trading them according to the methodology I've developed here. So I'm going for this 2-minute chart, second panel on the 2-minute chart. So that's panel 2. Panel 1 is price, panel 2 is relative volume. Boom, there it is. I want not the primary barcode, but I want to identify this 2-bar pattern here. Okay, 2-bar pattern, which is a climax followed by a churn bar. And I have that right there, 2-bar pattern. Okay, so each data series has its own values associated with the different signals. I'm not going to try to tell you what those are. That would be pointless. But know that it's very simple to access these. Not necessarily easy when you're learning, but it's simple. And once you know how to do it, it is easy. If I can remember what they are. Okay, 1 second. I need to open up this reader manager. So we have what's called a reader manager. We have the same thing in NinjaTrader 7. So this was the big thing. This is what makes all of this possible. So let's just give you an example of how this would work. So you start up NinjaTrader 8. You have the reader manager open. Well, not in this order, but you start up, you connect, everything's ready to go. You have the reader manager open. You're ready to start trading. You've got BloodHound active. You've got BlackBird active. You're waiting for the next signal to initiate a trade. How do you get all this stuff connected and working? You use this reader manager here to get the connection established. And this is just getting going good here. So I've got one reader connected right here. Oh, I haven't connected it yet. That would be why. Yeah, you do have to connect it to the result node, just so you know. Okay, now that it's connected, now I can recalculate everything. Don't fail me now. There's a 2-minute, that's the panel 1. Oh, I see what's going on here. What is going on? I thought I saw what's going on. I'm having a hard time here. Give me 1 second. Let me figure this out. Yeah, it's weird. It's like it's calling the panels, the indicator panels, 1 now instead of 2. Let's see. I'm having an issue here. I don't know what's going on. Well, anyway, I'll show you it all on Saturday. I think I've just identified, hopefully, the final bug. We've been going through, not to make light or pawn off me fumbling around here on anybody else, but NinjaTrader 8 is not very easy to program with. Well, I mean, it's a completely different, it's a completely different drawing system, and it's just been a nightmare to try to port everything over from Ninja 7. But we obviously have the volume analyst working flawlessly now. This reader manager system is the newest thing that we've done, and we've been working out the bugs for the past 3 weeks, 2.5 weeks. And as it typically goes when you're trying to demo something, that's when you find the next bug. So let me kind of wrap this up. We'll go into more details about this on Saturday, and for sure this is going to work on Saturday. I don't know why this is not working. I probably have an error that's popped up after using that time frame calculator, since these are both add-ons. Real quick, that's another really awesome thing that Ninja has given us here with Ninja 8. So Ninja 8 is pretty amazing, really. But we now have the ability to do these different add-ons, which kind of gives you the ability to make really whatever you can think of in another window. It's kind of like separate from the charts. So we can really do some amazing things now with this add-on functionality, but it is brand new, and it's brand new to us. And I think the fact that I'm using 2 different ones here, I probably just identified a bug. But anyway, you'll see all this live in market replay and some pretty elaborate trade management stuff in BlackBird here on Saturday. So what I want to do is tell you guys just a little bit about what I'm going to do this last time. And honestly, I'm so sick of gimmicks and sales and today's 20% off, blah, blah, blah. It's just bothers me. So after this, everything is going to be one price from now on. I don't really care, to be honest with you, if it sells or not at this point. I just want to finish this stuff so I can get on with trading full time. But normally the volume analyst is 1645. Okay, it's beyond anything that's there's nothing even remotely close to it, and it's only getting better. I'm adding the bid-ask stuff, which will make the churn bar and the climax conditions even more accurate, and will give us directional signals out of those, whether they be long or short at a low. So there's a lot of stuff I have planned to add to all of this over the next couple of months. Now, I've just recently built out a new membership site. So that's what I've been focusing on, besides doing this testing and getting everything to the point to where it's actually working properly. So what we're going to have here, let me do it from here. Let me give you guys this link. Where is this? There we go. Trying to find the chat here so I can paste this link. There we go. All right, so that's the sales page. These are some old videos. This is the last webinar that I did with NinjaTrader. There's a lot of background in there if you want to know more about me. I think the first 30 minutes goes into the details of me and my track record and how I put all this stuff together and whatnot. This is kind of an older video about the volume analyst. It's a lot of the stuff is similar, but it's progressed way beyond this at this point. So the fact that we can do relative volume on non-time-based charts is really the game changer for all of this. And I think that will be abundantly clear on Saturday. So on Saturday, we'll be going over using this in tandem with BloodHound and BlackBird to actually start to automate some of these signals. So I started the presentation by saying that fully automated trading is doable. People do it. It's not something I'm interested in. I've spent a lot of time trying to get to the point to where I could fully automate everything. And honestly, you need to retain some level of discretion. And your focus as a trader should be to become the best trader that you can be, not create the best automated system. If you're creating the best automated system, well, then you're something else. We're not comparable, you and I, right? It's two different modes. So me, I want to become the best trader that I can be. And I can do that by using technology to aid me in my efforts and to help me monitor more markets, find more setups to trade, find better setups to trade, and get notifications and alerts. And then also to manage the trade. And that's where BlackBird comes in. So I started really getting into BlackBird in Ninja 7 several months ago, I guess 6-7 months ago. And then I had to put it on hold because I had to start doing all of this stuff in the back end here, kind of wrapping everything up, putting together kind of a shell so that I could begin to make a more structured course because some of this stuff is pretty, intense and I don't want to say it's complicated, but it's difficult for people to get through without very concise training. A lot of my training, while we have hundreds of hours of it, is not as condensed as I would like it to be. I'm trying to get everything into bite-sized 5-minute videos. So I built out this new membership site, and it has this course software which will allow me to structure all of the training in a way that's much more digestible, more easily digest, and I think it's going to be just way easier to learn this stuff. So I've got the shell built. It's finally up and live, and now I'm just starting to put together the structure of the course, and then start to make these 5-minute videos and 10-minute videos and quizzes and all that stuff. So that's what I'm working on now. I've got kind of the framework built out for that, and it's going to be a lot easier to get through this material and get to the point to where you guys know it as well as I do, which is the ultimate goal for me, being that I haven't been the best teacher in the past, and I want you guys to know it like I know it. And in order to do that, I've had to learn how to teach properly, and it's not something I knew, evidently, now that I've started to study it. So that's kind of where I'm at now. I'm starting to build this stuff out, and this is absolutely the last time this is going to be that price. I don't even want to say it. And that's with the bars. And then you really need BloodHound to do the things I'm going to be showing. Well, you need both BloodHound and BlackBird to do the things that I'm going to be showing you on Saturday. So when you come Saturday, I think you'll see some pretty amazing stuff, and we'll go over the rest of the details of this. Then, for now, you can go through that page if you like. This is a brand new site as of today, actually. So we have some details, maybe a little bit better details on the different products that we sell. So basically, I hate to call it products. I mean, this is all the software that was necessary to build out the trading methodology that I needed to make consistent money. And well, I had to sell it to pay for it, if that makes any sense. So there it is. I'm not going to try to sell you anything anymore. I'm not going to market anything because I don't know how to market. Right now, I'm going to take some questions and then we'll call it a day here. Let me see. I've got a few of them. I think Josh and Corey. Josh has been answering questions. Let's see. You're not seeing.
I
Yeah,
see
go ahead.
one here, Daniel, that hasn't been answered, and that is when will the new volume analyst be available to existing owners?
Tomorrow.
Tomorrow. Awesome.
Yep. Yeah, there's that one thing that I just saw obviously has to be addressed. So I'll have that wrapped up for sure tomorrow, and I'll send out the installer to you guys, and we'll go over the details. Yeah, all of you guys should come Saturday because we'll go into the guts of all this stuff pretty deep. Do you see any other ones? Okay.
I see a question here from William that says, do you need to name the logic diagram? That was asked about 10 minutes ago.
No, it was named test.
Okay.
Yeah.
That's been answered.
The webinar, if we are about to talk about volume, can you show the highest rated price in multiple different chunks of market? For example, so Joel is asking, if we're talking about volume, can you show me the highest rated price in multiple different chunks of the market? The highest rated price. For example, pick a high that was made, and as the market moves around after that high, where is the true highest rated price? And if the volume comes in to change that price, are you aware of it when it happens? So the volume is real time. Joel, I really have no idea what you mean by highest rated price. That doesn't jive with anything that I know. If you could give that a little peek, I'm not sure what you mean by highest rated price. Let me see.
I think he meant traded price.
Oh, sorry, maybe, yeah. So you're asking me, can we see what the highest traded price is? In multiple different chunks of the market. Honestly, I don't really understand the question. Do you? Ty, I don't get it. I am pretty dense
Joel
though.
is saying that yes, that's what he means. I personally am not sure either. Maybe Joel, if you could clarify just a bit more in the chat there.
So the highest traded price would be the high of that bar, right? We have any other questions here? Don't have so many questions. I must have done a great job, Ty.
Yeah, I think your support got to a lot of them.
Yeah, awesome. Thanks, Josh.
Yes. So Daniel, do you have a specific email that you want them to reach out to if they have any other questions following this presentation?
Yes. info@tradetheplan.com.
info@tradetheplan.com. Awesome.
Okay, there it goes. Yeah, sorry. Let me bring that page back up also.
George is asking, does your master suite of tools work for Forex traders?
Yes, it does, and I'll show a lot of that on Saturday actually. So problem with Forex is the volume data, right? We only have tick data. I mean, evidently there are a couple of firms that do supply the volume data that trades at their brokerage, but I don't know if I would trust that data. But we do have the total number of transactions for Forex, and when you would use like a tick chart, you couldn't display volume on a tick chart, raw volume, because there is no raw volume. But we can display this relative volume on those tick charts, which is really a pretty excellent proxy when you're using a tick chart for Forex. And I'll show you that on Saturday. It's, you know, for Forex, we can only use the volume per second, which is not volume. It's the total, again, it's the total number of transactions. It's the total number of ticks per second. But with this relative volume algorithm now, we can actually see those ticks compared to the average ticks for the amount of time that transpires in that bar. So it's pretty cool. But yeah, we'll do that on Saturday. Let me get you guys the link to the training, to the login, the sign up form. If I can talk straight here. It's not letting me paste anything in there. Oh, I've got the questions here. I'm sorry. Let me put it in the chat. Yeah, so there's the sign up registration form for Saturday. And then we'll go into a lot of examples with BloodHound and BlackBird, and I'll show you a lot of different major swing highs and lows throughout the past week or two. Toolbar will be done. That's a good question. I mean, we never really know, right? That's kind of the thing with all of this. But we have the show. I mean, this was the major thing to tackle, was to get just this little window here working with drawing something on a chart. So now that we can do that, well, it's a pretty big tool to try and port over to another platform. But I'm thinking we'll have like an alpha version that you guys can use with the market geometry and fibs and lines, maybe the alerts within 3 weeks. And then after that, maybe another month and a half or so to get the rest of it ported over. And then probably another, couple of weeks after that to work out any bugs that are introduced in Ninja 8 from porting it over. So yeah, it shouldn't be too much longer. And then the divergence indicator, Divergences Pro, will be probably less than a month, I would imagine. We do have some of it done already. So yeah, we won't be too much longer on Ninja 7, but the way that we're doing this import-export system with the analysis, everything that we'll be doing on Ninja 7 will import into Ninja 8, hopefully with that first alpha version. So even if I have to stay on Ninja 7 personally for another couple of months, you guys will be able to import my objects, my analysis into Ninja 8. So shouldn't be too much longer. Igor, can you show some trades you would take on smaller? I'll do that on Saturday, Igor, for sure. We're pretty much out of time. It's over 2.5 hours now. Vito, you think he's meaning the volume divergence? Yeah, maybe you meant like at what point do we start getting those signals? You mean okay, maybe you mean that are these signals back painting, or are they actually painting in real time? So they're painting in real time. So with any just think of any group of conditions that you would use to initiate a trade. What do you do first? First, you identify the bars within which you can begin to look for a trigger. That would be your setup. And then you have the condition that actually would trigger it, right? Would trigger the trade. So with the volume divergence, you have a setup and you have a trigger. And you can display both of those objects. Let me see here. You've got the setup here, volume divergence setup. And then you can display those objects here. So that's all of these volume indicators are real time. They don't wait for the bar to close, and they don't plot stuff after the fact, and they don't repaint. I don't do any of that. That's deception. That's anything that back paints and repaints any more than one bar back is deceptive, and that would be another word for a lie. And I don't do that. So I'm not trying to cheat anybody or make anybody think something that's not true. So these little circles are the exact bar on which you start to get that volume divergence setup. All right. And then once, we identify the setup. So for instance, right here, market is going up into a high. You can't get a volume divergence setup until until it at least double tops or breaks that high. And it has to do that on less volume. So again, this is the big buying climax. You go down, you go back up on lower volume. That's the volume divergence right there. And you don't get that until this bar, okay, until that bar. So that's the first bar on which you get the volume divergence, and you would get that signal the moment you double top with that previous high on less volume. And it has to be significantly less. And then you can also filter it by conditions. Okay, this trigger, that arrow, that's the trigger condition. So you get a setup, and then once you have a setup, it begins to look for the trigger. And the trigger has to move in favor of the trade to confirm it. Otherwise, how do you confirm it, right? So you always have to think with stuff like this, with conditions, with trades, especially with automated systems, with algorithms. It's always about setup and trigger. Identify the bars on which you can start looking for a trigger, and then what's the exact bar that you can trigger. So that's kind of the condition building in a nutshell. Yeah, Tom, it's not gonna let you in there just yet. You can ask for a password reset, and it'll send you a new password, though. Everybody's gonna have to do that. Yeah, all of you existing, all of the existing members will have to click on I forgot my password, and then it'll send you a new password, and then you can get in there. I don't have everything moved over, all the content yet, but it will be in the next day or two, so just bear with me. Yep, you got it, Mark. Thanks for showing up, man. I'll show you guys some more on Saturday. You have to use your email. So I'll send out an email. We just made it live today, hoping that we would be able to get all this stuff done today. And I always set deadlines that are completely unreachable. I think it makes me more productive. It does make stuff get done faster, but it doesn't, let's just say it makes me older faster. But at any rate, we are getting stuff done, so. Reschedule Saturday for 54 hours. What's that? 54 hours from now? Yeah, Reader Manager will be included, Vadim, and we do have it opened up for you to build out a strategy to be able to access the data series via a custom strategy. Yep. You got it. Sam, it'll be probably 10 hours. We'll go from 11 to 9 at least. I'm just kidding. I do have a way with getting onto these rants and sidetracks or whatever. All right, you guys. I'm probably missing some stuff. Could I see the highest traded price of the day with the charts I have? Yeah, the highest traded price of the day, which would have been here, right? Or you're talking about after the open? After the market open? That would be right here. Okay, so real quick, one more thing. I swear this is the last thing, Ty. We have a condition builder built into the volume analyst so that you don't have to write or you wouldn't have to use 5 or 6 different solvers in BloodHound to achieve the same thing. So you can start off, like let's say you want to have a volume divergence and you only want to see volume divergences that end on a churn bar or a 2-bar pattern even. So this is really cool. I'll show you more of this on Saturday as well. But just real quick, you have relative volume here. All the way at the bottom, we have this little condition builder here. So I want to see only the setups. 1 bar, 2 bars. 2 bars is fine. I'll do 1 bar before and 2 bars after. And I want to have, you can have 2 sets of conditions and you can have as many conditions in each set as you want. But I'll use 1 set and I'll use an extreme, no. That's a 2-bar pattern right there. But that's a climax followed by an extreme churn bar. Let's just say I want any churn bar, churn or extreme churn. So if I reload it now, it's, what in the world? Hang on a second here. Oh, I'm sorry. I've got 2 different indicators on the chart, and it's really cool. Ninja allows you to make those lines transparent, but you can take an indicator and take it out of sight like that. You see? So it's a little tricky. All right, so I have 2 indicators on here, right? I've got relative volume here and volume here. So it's actually, let me just remove one of them so I don't make a mistake again. Okay, I'll just remove this one. Okay, so now if I only want volume divergences that end on a churn bar, I can set that right here. And I want to set that to end. I only want 1 condition. And I'll set it to churn. So that will filter out any volume divergences that don't end on a churn bar. I think I just identified a little visual display bug here. I don't know. I've got another little bug here I found. So it was working for me earlier. I don't know why it's not working now. Maybe because I just removed that one. But that condition builder is pretty elaborate. So it's natural that I find a bug or 2. So that'll be fixed for tomorrow as well. So that one in the reader. And then you guys that own it will get it tomorrow. And then, well, yeah, whoever else gets it, it'll be available tomorrow. And then next week, we'll release that time frame calculator and probably an update for this new version of the Volume Analyst for Ninja 8. So probably you guys that own it could help me test a little bit more thoroughly. I mean, I'm testing night and day, and we've got most of it cleaned up, but evidently not every single bug. So there are a couple, but the Ninja 7 version is flawless. I mean, that thing is 100% immaculate. So, all right, you guys, I'm going to shut it down. Ty, I know you're ready to go. I'll talk to you guys on Saturday then. Let me just paste you the link one last time.
Yeah, it's no problem at all, Daniel. I mean, as long as questions are coming in, I am totally okay staying here as long as it takes.
Sweetness. Thanks, man.
Yeah, and I'm looking forward to the Saturday presentation. So the link is in the chat, guys. It'll also be included in the email that I send out tomorrow morning, which will contain the recording from this event, and it will have the invite link for Saturday's event as well.
Awesome.
Like you said, if you guys have any questions that didn't get answered, just send those to info@tradetheplan.com. And any questions specifically for shark indicators, you can just direct to support@sharkindicators.com.
Awesome.
And yeah, thanks again, Daniel. And thank you, traders, for tuning in. And everyone have a great night.
My pleasure. Thank you, Ty. All right. Thanks, guys. Talk to you Saturday. All right. Bye,
All
everyone.
right. Adios.
Adios.